Welcome to the Swing Trading with Cycles channel. We're going to review Apple today from a technical analysis perspective, focus on price action, focus on and use cycles to quantify things. And what I'll lead with here is what we've been looking at most recently is these ratio charts. So on the left-hand side, you have Apple itself, the stock, and this is your yearly chart. So also called an annual chart, I've been calling it. Basically, every candle here is an entire year of price action. So this most recent candle, which is red, is 2022. And this candle here, all the way to the left, is 1980, right? So this is the whole year of 1980. This is the whole year of 2022. And on the right-hand side, this is Apple divided by the NASDAQ 100, right? And this is going back to 1985, because I don't think the NASDAQ 100 was around in 1980, right? Or like right when Apple started, I should say. And so this gives you a sense. So again, this right-hand side tells you how Apple has been performing by itself. So like if you bought it down here, you're doing really well because you went all the way up here. This tells you how Apple is doing compared to the larger index of which it's a part. And it wasn't necessarily a part of this index this whole time, to be fair. But the point is it outperforming or is it underperforming? And so what you'll notice is, although Apple is red for the year, it's actually green for the ratio chart. So although it's down for the year, it's actually down less than the NASDAQ 100. That's the way of thinking about it, right? Like it's, because that's the thing about these ratio charts that you have to be really clear about. It doesn't tell you about the absolute performance. It just tells you how one thing is doing versus the other. So this is a perfect example where ratio chart is green, but the absolute chart is red, which means the other thing that's being, like the NASDAQ 100 in this case, is even more red than Apple. In fact, the NASDAQ 100 has made a new low below last year's low. In the case of Apple, and that's the first thing that you should draw your eye to, we don't have a new low below last year's low. So last year's low was $116.21. We have not traded down there yet. And we're obviously getting, and this is December 10th, so we're getting late in the year. And so we've only got, but so many trading days left in December to end the year. So it seems like a bit of a stretch that we would get below 116 between now and the end of the year. But that still tells you that could be sort of a near-term target for, let's say, early Q1 2023, right? And again, just to be clear, let me flip over to that really quick. So the NASDAQ 100, you can see there it is, right? Like it's meaningfully below last year's low, whereas Apple is not. And again, that's what this ratio chart is telling you, right? Let's just go back to Apple. So that's your annual chart. But here's the thing about this, right? The devil is in the details. This upper wick is bad news, right? Because this upper wick tells you there's a pullback happening on a lower time frame. That's how it works. Upper wick is a pullback on a lower time frame. A lower wick is a rally on a lower time frame. Do you notice this candle here from 2012? This is your ratio chart here that we're on the right-hand side. Had this same kind of upper wick, and then the next year it went red. I suspect we're setting up for something similar to that, right? So the 2012 to 2013 kind of pattern is what you think about. So 2023 is looking like it's going to be a not so great year for Apple, is it my thinking? Okay, so to understand what's actually happening, we have to zoom into lower time frames. So in this case, we'll go from the yearly chart to the quarterly as a starting point. So again, ratio chart is on the left, or excuse me, on the right, and your absolute chart is on the right. And so in this case, you can see Apple actually topped out, what is that, 182.94, right? So it topped out in Q2. Oh, wait, no, right. It topped out with the market. So it topped out in January, right? So this is your swing high, just barely. And this is your quarterly chart. And so we made a swing high for the quarter below this low here. So below 150, right? And we're down here at 142. And if you don't understand what a swing high is, you definitely want to make sure you take a look at that content. You'll see a link in the description. You should also see an opportunity to click on a link in the upper right-hand corner and at the end of this video as well. So that you can understand, like, the swing high is a really important pattern to understand because that's how a downtrend begins, right? Once we printed the swing high, we started a downtrend. And so we topped out Q1 2022, but notice for the ratio chart, we actually made a new high in Q4. So this is actually this is Q1, right? So that's interesting, right? Like, that is the Q1 candle for the ratio chart. That's the Q1 candle for the absolute chart, just the chart of Apple itself. Another way of saying this is, even though Apple went down, it went down less than the index. That's as we kind of said. This is the sort of visual representation of that in the quarterly chart, right? You had this big down red quarter, but all that tells you is the NASDAQ quarter was down even more. But here's the thing. This Q3 candle, really ominous. Like, this is such a bearish looking candle. Because remember what I said, an upper wick is a pullback on a lower time frame, right? Well, I mean, look how big this upper wick is. So that's a huge pullback. That's a ginormous drawdown. And now this is our current Q4 candle. I mean, look at this thing. Like, this is setting up for something like this. And really, to be crystal clear, the implication is that we make a swing high below the lows of these two candles, these two quarters, right? Those are like right around the 135 area, right? Yeah. And so it's like we've managed to stay above that this whole time. And obviously, once we do that, we'll test the low of this candle, which is around 130, call it. And then it's really a question of, are we going to be able to hold that low at 116 that we saw on that higher time frame? But more importantly, this whole time we had been still making higher highs on the ratio chart, and now that is coming to an end. Now we're putting in a swing high on the ratio chart. And again, notice what we're just talking about here, the chart itself, the absolute chart looks terrible as well, obviously. So we're about to start breaking down potentially on the regular chart, the absolute chart, and start to underperform the market. That's important. That's kind of your signal to just get the heck out, right? Like, if you look at different periods of this stock, like, this was a challenging period, right? This is your ratio chart, right? This was a challenging period where the NASDAQ 100 was outperforming. This was your period to be long Apple. I mean, look at that long. How many months is that, right? Because that's the thing. People are always hung up on this idea of like, oh, well, you don't want to miss the boat. Like, what are you talking about? This was 34 months. So Apple massively outperformed the NASDAQ 100 for 34 months before rolling over and then starting to just kind of, like, this was a massive swing high that, like, just created, like, if I zoom in here, right? This was a big, I mean, look at that, 3 big down months. And then we just start just kind of moving in a range for like many, many months. And then we start to outperform again. And now we're starting to pull back. But notice this one red candle, this was your COVID. No, that's not true. This is January 2021 where we pulled back versus the index. And then we just kind of rallied and made new highs. So we may end up seeing something like that. And that's the beauty of being able to track the ratio chart with the absolute chart as well, where we'll be able to see that, and we'll have a real sense of, does it actually make sense to go long here because I'm like actually going to outperform the baseline versus just doing well in absolute terms, which, I mean, frankly, just isn't good enough, right? Like, because your whole point is to outperform. And so if you could be in the index, well, why not, right? And so if we zoom in on the monthly, we can see that high came in October and on the ratio chart, and we can see it happened in January for the absolute chart, which is the same as the market where we kind of topped out and we started making lower lows and lower highs. And you can see what, like, that 116 level kind of coming into play. If we can't hold this like 134 level, that opens up 116, and then it's a question of, do we give back this whole rally, which is your move off the COVID low? I mean, that would be that's kind of extreme right now. No reason to think that we're gonna give all of this back, but that's what would be kind of at stake. That's how you want to kind of think about it. Those are the stakes. But at the very least, it would seem like we're gonna make a move down to 117. It's gonna be a question of, do we hold there? What is our react? How does price react once we get down there? And if we look at the weekly chart, let's zoom in here. So we're just working our way down the levels or down the time frames, right? And you can see we're just making a series of lower highs, lower high, lower high, lower high, and so it does set us up for immediate downside on the absolute chart. And we're just making lower lows on the ratio chart. And so at some point, you might expect there's going to be some kind of bounce on the ratio chart. At least, there could be a period where Apple starts to outperform, but it could still be a period where it's going down, right? Where maybe Qs are going down even more than Apple at that point. And finally, if we want to zoom into the daily chart, and here we'll just look at the absolute chart. So if you think about where we are in a potential daily cycle, right? Like that would be the start. We had a high on day 7 and it's day 24. So we're at a point where we have a left translated daily cycle, which, is bearish. That's not good. But at the same time, we're late enough in the daily cycle that we may be getting our daily cycle low soon. So all that to say, not a time to be pressing shorts necessarily, more of a time to wait, because once we do get a daily cycle low, we're going to get another little rally like this. Like the same little rally that petered out, we'll get another little rally like that. And the opportunity will be to sell that swing high, like down there, right? So once we cross below this level here, that was your opportunity to sell. What is that? So that's below 148, right? So you want to wait for some kind of opportunity like that. And on the really, really micro level, Friday closed, again, this is December 10th, we're recording this, so we're talking about Friday, December 9th. Friday closed as a crazy doji candle. So if anything, you're going to need to get out of the range of this, right? So the expectation is that we're going to open inside the range of the Friday candle, right? So something like that. Let's just add the borders here. Right, so something like that, right? And so it's a question of, do we make a move above the level or below? Right now, it's favoring below. That said, next week is going to be crazy in terms of catalyst with the last FOMC meeting of the year, the last CPI print. So if the market, if it's something kind of dovish and, CPI is like not hot, you could see a world where things kind of moon, like the market as a whole, and this kind of moves higher as a tailwind with everything. If we dump, then this is going to dump even harder because it's already set up for a dump. And again, you're going to look for us breaking that low. And we're talking about, at this point, this is your Friday candle, so we're talking about how we're going to trade on Monday. We're not going to get that number till Friday, till Wednesday. So if we look at what is the weekly setup actually, just to be. So on the weekly level, right, so on the weekly level, we're actually also set up for an inside week, right? So, high of 151 and a low of 140, which is a ginormous range, obviously. And so it's going to be a question of like, we're going to get a candle like this is your weekly version of what we just talked about on the daily, right? So you're going to get a candle that's going to open like, it's going to be like right here, something like that, right? So then it's going to be a question of, is it going to work its way lower, like break this low, or is it going to work its way all the way up here? Because it's going to open at the lower end of the range, which is another way of saying it's going to be a bear flag, essentially, off of like this down move. So a lot favoring downside here, but again, big catalyst filled week next week, so we could easily see a bounce, which theoretically could be a great sort of shorting opportunity. I mean, imagine you got short here. I mean, look at this weekly candle. My God, they don't get much more bearish than this. I don't know that we'll get a kind of signal like that again, but I mean, look at that, right? You short right there. Boom. So we'll leave it at that. That's our update for Apple. We'll continue to watch this, see how it reacts, depending on, how those catalysts play out for the market next week. And we'll report back to see how this thing kind of plays out. But thanks for watching.